Euro-dollar volatility is low even as Joachim Nagel puts a June ECB hike risk back on the table. EUR USD frames the pressure because the unusual part is the mismatch between a calm options market and a hawkish policy warning. The supplied evidence describes implied volatility near recent lows, while the pair sits in a tight consolidation. The useful part is the test in front of the story, not a broad market slogan. A surprise inflation print or ECB speech could be the catalyst that breaks the range. That gives the opening a measurable checkpoint and keeps the story tied to named levels, named participants, named rules, or named product steps. The confirmed baseline is muted price movement. The pair is described as range-bound while the dollar is stable, and both US and Eurozone data remain mixed. Technical context includes resistance near 1.1, a neutral RSI near 50, and narrowing Bollinger Bands. This baseline matters because it gives viewers the part that can be checked before any larger conclusion is drawn. It also limits the story to the facts already visible. Calm conditions do not prove stability. The viewer can separate the setup from speculation. One side is the factual baseline, and the other is the result that still needs confirmation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is a volatility squeeze around a central bank catalyst. In plain English, when traders price too little movement, any policy surprise can force options and spot markets to reprice quickly. For EUR USD, that mechanism matters because low volatility can make a rate hike warning more important because protection may be underpriced. The stress point is specific. Whether inflation data validates Nagel's warning or weak growth keeps the ECB cautious. This is the part that makes the headline useful, because it explains why one level, deadline, filing, reserve figure, integration, or data point can change behavior. The direct impact lands on FX traders, hedgers, exporters, and euro asset holders. A hike signal could support the euro, while a delayed ECB response could weaken it against the dollar. Exporters may dislike a stronger euro, while euro asset holders may benefit from currency strength. The practical consequence is hedging decisions become harder when calm pricing hides policy risk. That is the viewer value here. Understanding who faces the change and why the change is not the same for every participant. The effect is not evenly distributed, so the segment focuses on the group with the clearest supported exposure. The unresolved part is whether the ECB would actually hike in June. A hawkish warning does not mean the Governing Council has consensus. That gap matters because the Eurozone economy is weak enough to complicate a simple inflation-only decision. The cleaner proof would be stronger inflation data or broader ECB support for another hike. Until that appears, the story should be read as a defined setup with a real open question. That does not make the story smaller. It makes it cleaner because the unresolved detail is exactly where risk can be misread. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The concrete signal to follow is ECB communication, inflation prints, and a break near 1.1. Those signals would show whether the calm market is mispricing policy risk. EUR USD becomes easier to read if inflation stays sticky and the pair breaks higher on volume. It weakens if ECB guidance softens or price drops below longer moving average support. The final readout is simple. Low volatility is the setup, not the answer. A strong next signal should be observable, not emotional. A filing, close, data release, official term, usage number, or liquidity change.